Good afternoon. Welcome to GrainTV. It's Friday, December 19th. We had a sharp decline in the soft red winter wheat market out of Chicago with a 22-cent loss, while corn was unchanged and soybeans were down 5 cents a bushel. This morning we got good export news out of corn that gave us a bit of a lift as we traded through the day. 240,000 metric tons combined to Japan and Mexico, which was positive, but that wheat market really looked bad today, Cody.
Yeah, absolutely. You know, we've been talking about the wheat market in yesterday's show. We were saying that that sort of price action where you rally up very sharply and then you close near the lows, that really shows kind of a pivot point and could potentially mean the change of a trend. Now that trend was 6 days long of positive price movement here for wheat, and that was ended today as we traded down 22 cents. Now the thing that we need to pay attention to is that this is all really on the backs of Russia. We do know that there was confirmation that Russian exporters were not buying much domestic wheat here out of pressure from the government. So what this does is potentially takes Russia out of the export market, and that demand will then shift to other exporters, Australia, Canada, possibly the U.S., though we're really not price competitive on the global market right now.
And especially in soft red winter wheat, as we talked about yesterday, we just don't have the quality of a crop there. We are exporting hard red winter wheat though, but not so much in the softs.
Absolutely. Let's take a look at those puts that we were looking at yesterday. We were looking at that $6 July wheat put. It was 27.5 cents yesterday. Now it's trading at 32 7/8. Now what you're seeing here is the value of that protection, that price floor at $6 here increasing. That intrinsic value was increasing, and of course I think we're going to see a little bit of potentially volatility also built into these puts. The bottom line here is for producers out there, you need to be looking at these higher prices as an opportunity to price either cash grain or lock it in here, lock in a price floor using some of these puts. You don't necessarily want to wait for the second or third day when we're trading lower here to be locking that in. That's when those put values really seem to inflate. The time to do it is when we're rallying. Now, do I think that we're going to go straight lower here as a result of this? I tend to doubt it. I think there's still some uncertainty out of Russia, but I think for the most part we had this buy the rumor, sell the fact mentality today where we were really building up that premium, and then today we get confirmation that Russian exporters aren't going to be buying domestic wheat, and we get a little bit of a sell-off here. Kevin, we talk about the cash market a lot on Friday, and of course we've been moving a little bit higher here for corn. Now, how has that affected basis throughout the U.S.?
Yeah, I mean, basis overall was unchanged for both corn and beans this week, but we had a fair amount of volatility depending on which part of the country you were in. In the river terminals, we saw soybean basis really start to sell off about a nickel a bushel, and a lot of that was driven by weakness out of the Gulf where basis levels were off about 9 cents a bushel. In terms of corn, we saw sort of a flat period at the Gulf. Basis was unchanged. Lower barge rates along the river terminals helped increase basis levels there. So, you know, got a little bit of a lift on river terminals in the corn market. In terms of what we saw today after today's price action, it was interesting to see a couple of things. One, I saw corn buyers, the ethanol plant around St. Louis bid up their basis pretty sharply, now trading well above the river terminal there at St. Louis. So I found that kind of interesting. But we're seeing weakness in the western corn belt, not only for corn, but also for some of the soybean plants as well, with Fremont, Nebraska's Lincoln plant, and then also the Mankato plant, all being off about a nickel to a dime today. So there is some weakness still lingering out there from heavy deliveries.
You know, you were talking about ethanol, or you were talking about these ethanol plants. There was an ethanol facility bidding up. Now, you know, we know that this ethanol margin is coming down here, it seems. How is that affecting, and how do you suspect that will affect the cash market?
Yeah, I think, this week in particular we saw a 32 cent a gallon slide in Iowa spot ethanol prices. So right now, if I look at margins for ethanol plants, they're about $1 a bushel lower than they were this time last year. So I got to believe that that's going to put a crimp in ethanol production as we enter 2015.
Absolutely, and I think the USDA is expecting that as well, because we have been running very fast in terms of the pace that is expected by the USDA, yet they did not revise it in the December report. I think there is uncertainty out there as to what those margins are going to mean and what that's going to mean for corn used for ethanol. Let's turn our attention over to the Informa numbers. Now this is kind of interesting. They came out early on, and these are acreage numbers for the 2015 growing season, and what we saw is that corn acreage were revised lower by Informa here, down 2.7 million acres here to 88.01 million acres. We also saw soybean acreage rise here, 4.5 million acres to 88.78 million acres. Now let's just talk a little bit about soybeans, because what this means is that if you factor in a 45 bushel per acre into the balance sheet, what you're seeing is ending stocks coming out over 700 million bushels there carry out. Compare that to the December report for the 14-15 marketing year, which is only 410, and we have a pretty astonishing number.
Yeah, doubling ending stocks is a big deal in soybeans, and obviously it's still pencil analysis right now. There's nothing real about it, but I think the market may have to start paying attention to that disparity between corn and beans.
Exactly. What you can take away from this is really, it's more of a spread. It's more about the spread between corn and soybeans. What this means is that, if we do not see corn gain relative strength compared to soybeans as we move toward that acreage when farmers are going to need to make their decision, I think what we're going to see is a major acreage shift. Now, I would suspect that corn is going to gain ground compared to soybeans here as we move into the new year.
And keep in mind, it doesn't mean that both prices won't go down. We're not saying corn's going to go through the roof, but the relative, as you say, relative spread between them may need to change.
Yep, absolutely. Well, guys, thanks a lot for tuning in. That's the end of the show here on this Friday. If you have any questions about what we talked about, give us a call. The number is 877-472-4607. And if you haven't done so already, take a demo of the trading platform. We showed you some of those option premiums, and it's very easy to get that information live as the market's trading for you to make that and kind of build that into your own marketing strategy. Thanks a lot for tuning in. Have a great weekend. We'll see you here on Monday.